So welcome to the final lesson of this chapter. Now what we're going to do is we're going to rerun through F, Ripple and BTC. Because we've already set up these pairs, we're going to break them down on the daily chart and just get a little understanding of how we're going to put all of this together. As the aim of this lesson is to use everything we've learned into one big piece of analysis. And what this means is we can now get an understanding of what's going to happen potentially in the future. We can look at key breaking points, key reversal points, and then we're going to put all of this together on a Litecoin chart, which is currently completely blank. So we start off with the Bitcoin chart. We've added our Fibonacci on the weekly. We do know there is a potential fork coming, and last time this happened, Bitcoin soared again in value. So with this in mind, we can take into consideration the target we have for 7,000 may not be too hard to reach after all. So what we'll consider right now is we have broken out. We're on the weekly chart. The Fibonacci has been respected. We've retested the first level. Now what this necessarily means is we have two options from this play. We could either retest down to 5,000. We could spike straight up with no real retest to 7,000 and then retest back down. Or we could just completely fall to another level. And what I mean by that is we now draw the new wick to wick. We do actually have some levels here. We have a 61.8 and a 78.6. So instead of drawing lines, which we already have, I will actually, in fact, no, we can do it this way. We will draw lines. And what we'll do is we'll then convert these into zones and remove the Fibonacci. So we could have another short-term spike here, or we could actually break through 7,000 and hit 7,600. So what we'll do is we'll go down to the daily. We now have our two new zones, and if you look, they correlate perfectly with support and resistance zones. So what I can now do is I can already see we had a breakout here. We broke up, we soared upwards. So what we can actually expect potentially is another similar play from this height here. So what I'll do is I'll get rid of this. I will now make a zone from this level and remove the lines. We'll make this blue. No, we'll make this green, a bit easier to see. Really fade that out. Then we just fine tune this slightly. We can put that to around there. Get rid of this. We can now do the same below. Do that from around there. We now have two key zones of reversal. So again, it's good to have these zones set, because what this essentially means is if price does reverse and break your main level of support and resistance, which are the key levels we've drawn here in black, should price break these levels, we now have zones that we know are very, very likely to be tested. So what I have noticed, again, just right now, is this. We have a trend line forming. So now it's starting to take shape. So what I can potentially see right now is Bitcoin reversing. We have two options. Could hold here and retest straight upwards, which would correlate with the broken resistance turn support. However, what could happen, we could have some consolidation, and we could actually consolidate all the way to this point here before exploding upwards straight to 7,000. With the current momentum this has from the breakout, I actually believe the first play is more likely to happen, which is more like this. Again, no one knows right now, but judging from the momentum and the fact we're still trying to push back to this level, the momentum is extremely strong. So what I can now do is zoom out slightly. I can get the Fibonacci tool. I can draw it to where our correlated zones are. And all we know is, should there be a bad news release, one thing I have in mind is we have just had an announcement that Russia have confirmed they will be regulating cryptocurrencies by the end of this year. Now, if that happens, This happened with China and the price absolutely melted. So again, the zones we have marked here, these are key levels that could be tested for manipulative drops, especially when bad news comes out. So if bad news comes out, for all we know, we could easily spike up here and just melt straight down to one of our highlighted zones. But the point is we have these set, so we already know what is going to happen. So how I normally view the charts nowadays, I don't really use the daily on a regular basis. I actually stick to the weekly. Because we're holding our investments long term, we're always just waiting and waiting for our final target to be hit. Once 7,000 is hit, then you can take some profits off the table, and whatever else happens in the meantime is all just fluff. Because at the end of the day, we're still in a very early space and everything is new. We're not essentially going to crash and destroy the whole market when we've only just begun getting, we're not even at the level of mainstream adoption, in fact. So what this means is these targets will be met. The problem is getting there is the trouble. We'll have a loss of volatility, a loss of spikes, and a loss of hectic behavior. But what we've done is we've set the zones, so whilst we're waiting for the climb up to our level, when a drop happens, should it hit this level, which was the 61.8 on the daily, we can now stop, we can buy some more. This fits in with the dollar cost average strategy, where we buy and buy every time the price dips or even goes higher. Because we're doing this for the long term, it does not matter where we get in. The point is we keep on adding entries at great prices. So when this happens, we can expect to crash this level in a worst case scenario. If not, we will be expecting a retest of 5,000, a potential retest of the trend line, and then a straight spike to 7,000. Let's move to XRP. The levels were already set, so all we need to do is just evaluate this quickly. We're on the weekly chart. The trend line has tested perfectly. It's bounced straight from the 61.8% Fibonacci. This confluences perfectly with the trend line, the 16.6 cents support. We've smashed through the counter trend. We've now retested the counter trend, and we could actually say we essentially have a new level of resistance. The fact that price fell straight from this zone. So we can go to the daily. We now know that now that we've retested this counter trend, we've retested a new level of support. We now know where our long-term targets are. We have 55 cents and 70 cents. We now do not need to worry what happens during this process. All we know is these levels are expected. The price has fulfilled our analysis. It's worked to an absolute T, so we do know it will continue down this path. So when we go to the daily chart, zoom in a bit more, and what you can see is it's a very, very large rise to get to 55 cents. So when you look on the daily, we've smashed through, we've retested the counter trend, again, the confluence with the support level. We have just formed a new resistance level, which does correlate perfectly with prior price action. So all we'll do is go back to the weekly. If you want to correlate and check if there's any further Fibonacci's, you can. However, the likelihood of this being met is not too strong right now, as we have just broken key levels. If this does happen, we do not want to leave our chart looking like this. This is messy. So what we'll do is we'll get the zone tool, the rectangle tool. We'll draw a zone. We'll delete the Fibonacci and clean up this chart a little bit. So what I'll do is I'll get rid of this. I'll actually get rid of this as well, as we now have a new level of resistance. Chart's looking slightly cleaner. I'll now go back to the weekly. So now I know, should the conference that's coming up in 3 days provide some bad news, we have the 61.8 and we have another zone that we have just drawn in a worst case scenario. Now we sit back and we wait for our analysis to be met. When we move to F, again, we have the Fibonacci set. The 61.8 correlates perfectly with the $200 zone. We're respecting the trend line. We're on the weekly chart, remember. We have retested 400 twice. Now Ethereum will be having another hard fork soon. We will take into consideration the fact price soared completely last time this happened. We now have 2 new levels we are expecting to be reached. We have 472 within this zone, and we have 579. Now what we can expect with a breakout from the previous high, because this level was so heavily respected, a breakout will absolutely soar the price to these new highs. Now these levels are set, we're ready, we're anticipating. We have every single support and resistance line in the crucial areas established. We have a counter trend again, which is just broken and we covered in the last video. It's broken. We are now at the final stage of the uptrend. So what this means is we've broken the counter trend, we've retested the trend line. Our resistance levels are being broken by the day. The only thing that's remaining is some good news, and the surge will absolutely send us forward. And because we know this news is coming out, we can anticipate these new highs. So what we'll do now is we'll move to a blank Litecoin chart. We're going to do this analysis from scratch. So first of all, we'll start off from the monthly, as Litecoin actually has plenty of data to analyze at least one level from the monthly chart. Now what I see already is a huge manipulative spike, and this zone can be marked instantly as it has been respected twice. We now have this level here. We could do this, but it doesn't respect as well as this. We can always fine tune this on the weekly and daily. We now have another level of manipulation. A huge spike at $65. These zones are now marked. For me, these are the key standout levels. We do have this zone as well actually. It may not be too crucial, but when this zone is broken, and you'll see this clearer on the weekly and daily, this is what will trigger the move to $100 plus. So let's go down to the weekly. So once we're on the weekly, you can see this level was perfectly respected. 1, 2, 3, 4, 5, 6, 7 times. Now remember the fact that levels do not have to be perfectly hit to be considered as a retest. So we have had the full spikes several times. So when we move back to the current price action, we can see these levels are really working. But one thing I will do, I will actually increase this slightly, just here. And what we can start doing now is we can start drawing the lines in between and the zones. So we actually have a weekly zone here, which is crucial. Leave that there. We do have another zone which we're currently at, although I do not consider this a zone yet. So we do have the weekly chart here, and I will actually increase this. Now we're on the weekly, we can see slightly clearer. This is where the real reversal happened. And from here we spiked up, we reversed perfectly. Price failed to close above this level 2 weeks in a row. We sunk all the way to $35. This level being crucial, as this is where all the buy orders are set, which sent the price slowly back up to its previous high. So now when we go to the daily, we can see the level we drew was a perfect level of resistance turned support. So not only have we respiked from this level, but we've actually held this level as a support. The candle closed all the way back up where we expected. We then retested again, and we've now broken slightly above, and we're starting to make new highs. So what we'll do is we'll highlight a new zone just here where the price spiked from twice. We're now consolidating around this zone, but it looks like we will actually be closing on this zone. And if we do close above this zone, we can expect $65 to be met. So what we'll do is we'll start to notice another trend line. The trend line here, 1, 2, 3, 4, 5, 6 retests. So I'll actually extend this further, as you cannot get a more valid trend line than this. In fact, we even have the main manipulative spike taking place and closing back on the trend line. So what we're starting to do is we're building a structure, and we can start to see what will happen next. Now this region here is just an empty zone. For me, there may be this here. This may be another level, but it doesn't seem strong enough to actually sustain. The price action here was way too quick to consider a key level of support and resistance. So what we can do is we can highlight this zone as a potential. What I'm actually expecting now is go to the weekly, actually get a nice long-term Fibonacci drawn here. And what we can see is that does not work. So what you do is you drop this down to here. we then slightly increase and play around with this. Go to the monthly. Because this is a long-term chart, this does make perfect sense. We do not need to use the weekly. Move this out of the way. So what you're starting to see is the 61.8 was perfectly in line with prior levels. We've spiked this level twice. So now when I go to the daily, you can see the 61.8 was a previous level of support. Price has now spiked through one final time. This level has been proven valid with prior price action. And with the Fibonacci tool, we should always look at how it respected with the previous price action, whether that's several days, several weeks, or several months. This helps you confirm this is a valid level. So what I can now do is add another Fibonacci tool, just to give me a short-term insight into what could be happening. Now, one thing I should mention is if you notice now, this does not work. So what I'll do is I'll put this straight here to the close of the candle, the actual body. The wick to wick does not work. We can see that by dragging this down. It's not valid whatsoever. So by dragging this to the body of the candle when it closes, we can see we have the 78.60, which is the main level. So should we spike lower, we could see 51.50 cents met again. This aligns perfectly with our trend line. And what we can now do is we can start to eye up where the short-term targets will be heading. So we can already see that $65 is perfectly in line with our next resistance level. And the second target is in fact exactly where we drew our zone. So $71 could be an initial target. But I do believe when it hits this zone, due to the weakness of the support level and the resistance levels, we could spike straight through to $80. So what we'll do is we'll switch to the weekly, get rid of this, get rid of the Fibonacci. We now have a nice clean chart. We can even get rid of this on the weekly, but to be honest, we'll keep this for now. So what we'll do is we'll start eyeing up the long-term levels because we do not want to worry about daily fluctuations. The fact is we have $120 here. We have $100 and almost $52 here. All we need to know is the main long-term Fibonacci's are set, the levels have been respected. We can now anticipate huge upside breaks to these levels. The main concept now is we sit and wait. We wait for the news to come out. We stay on top of the news because the news gives you the crucial time to when the potential breakout could happen. For example, if news was to come out around October the 11th, October the 20th, my apologies, this would align perfectly with a trendline retest and a support level retest. So what would happen is we would break through, we would retest the support and trend line. The news would then accelerate us to new highs. So all of this has to be taken into account and help us build an overall image of how these charts work. So hopefully now you can understand that do not fear. For example, when you see a full spike of a level not perfectly retested like here, it does not mean the levels are not valid. It just means markets are being manipulated because they're trying to sucker in the people who are used to the Forex and stocks analysis. So guys, that is the end of this lesson and the end of this chapter. We're now going to move on to how to actually buy and sell the cryptocurrencies and how to navigate through exchanges. See you in the next chapter.